Hey guys, I'm Dakota.
I'm Lori.
And today we're going to have a look at an uncensored view at our favorite insurance company.
US Health. So I think that we're at a time of year where prices increased so much on the marketplace that US Health is doing a lot of business. A lot of people are picking up these plans. So there are just some things that you should know that in my experience, they don't have the most forthcoming agents about all of the details of their plan. And so we're going to highlight some of the good, the bad, and the ugly of these plans. And hopefully it was something you heard from your agent. But if it wasn't, that's definitely something to consider as well.
So let's kind of dive in. So in private insurance, like every other care we look at, you'll see a lot of names going on here, right? A lot of people that we talk to that are on these plans are like, what are all these names? So let's kind of break them down.
So, and this is true in all insurance plans, you guys. There are who actually administers it. There's a third party administrator that actually typically handles like the billing and all of the customer service. There's an underwriter. So there are a lot of names with most plans, but typically when you're on like a work plan, it would be like a Blue Cross plan managed by Blue Cross that is administered by Blue Cross. So you would only see that one name, where when you're doing things on the private side, you typically have 3 different entities in most of these equations.
Yeah, 100%. So a lot of people that end up on a US Health plan say, hey, I have UnitedHealthcare. I have United. What's your thoughts on that?
So I think that they spend a lot of time trading on the name, honestly, and I get it. I mean, it makes sense that you would want to trade on the name because UnitedHealthcare is a really well-known name. However, I just think that as with anything, if you are being deceptive or dishonest from the beginning in your transaction with a client, then there's probably a reason why. What are you hiding? They're not a UnitedHealthcare plan. They're actually a Freedom Life plan. The only thing you would see that had UnitedHealthcare on it would be the actual network that they utilize. But if you were to take that plan and call UnitedHealthcare, they would actually have no idea what you were talking about. They would say, you're not our client.
Yeah, United's like so big that they go buy insurance companies. And what's funny is since we've been in the game 10, 11 years, is we talked to some reps who actually worked at United. And what they said is and they didn't really agree with the decision of United Healthcare buying Freedom Life or these other names that we're about to say, but they said that they actually sent their executive team, this is interesting, insurance team, phone, like burner phones, and said to call sales offices, and these executives called and they found that, and this is their sources, allegedly, that their agents were lying on calls, and they recommended United not to buy this company. United bought it anyways. And so it just goes to show that United owns a lot of companies out there, but you kind of have to vet the agency that you're working with because you don't really know sometimes what's behind it.
For sure. And I think that they are extremely profitable. Unfortunately, it is because oftentimes of like deceptive practices. One of the most stringently underwritten products that's in the market. And honestly, you would have to be in almost absolute perfect health condition to get approved for one of these plans. And so what you will hear time and time again is like, I applied for a US Health plan. My agent told me, just say no to everything. Don't tip them off to anything that's going on with you. Oh, but I have hypothyroidism or whatever. Yeah, it doesn't matter. Just say no. And so from the what they call a V call or a verification call, they tell their clients right out of the gate to be untruthful on the V call. So why is that? Why would you have to do that? And it's because their products are so strict with their underwriting that if people were truthful, they probably wouldn't get anyone approved, right? So that's probably tip number 1. If your insurance agent is saying, just don't tell the truth, that puts you as the client in such a lurch because really it's a contract you're entering into and a recorded phone call. And trust me, insurance companies are constantly looking for reasons to not pay out on claims. And so if they catch wind that you were not truthful on a call, they really would have grounds to not pay your claims because they could void the contract. So if, again, right out of the gate, your agent is starting out telling you to be untruthful, where there's smoke, there's fire. There's probably something there.
Yeah, and just from other agents who have worked there, this is kind of how, it's kind of sad, but how kind of they brainwash their agents is they say nothing else is good out there in the market. Like every other plan sucks. So it's better to get people on these plans so they're quote unquote covered instead of not being covered, which is just crazy, right? Because that's not true. There's tons of good plans out there.
So many options.
So we just pulled up some reviews, and not to bash, but these are what real customers are going through because they felt like they were lied to.
Let's read some of them and see if they're like factual, right? So I just noticed this company has been pulling different amounts from my account. One entry was for $633. Do not use this company. Scammers. I do not know anything about them and not sure how they got my bank account information. Well, I gotta say, for this person, Teresa Davis, they could only get your bank account if you gave it to them. So you may not have remembered that part of the process because there was so much that went on in that conversation. But before you took the verification call, before they could submit your application, they took your bank information. They just probably didn't share with you that when you completed that call, and this is also another common thing that they do. They don't share that. They'll just say, well, just take the call. Just take the call. Because what happens is if you take the call and the plan is approved, the agent gets paid their commission upon that approval, whether or not you actually take the plan. So a lot of times they're in a game to just get you to take the call. Even if you cancel it later, they've already been upfronted 9 months, most times 9 months of the commission that they would have made for that sale. So they're playing a game of, I got to get paid, just get them to take the call. Say whatever you can to get them to complete the call.
Yeah, which is kind of sad because like that just causes buyer's remorse if you press people into stuff, right? And so I don't know. This other one, let's read it. I cannot express this strongly enough. Do not do business with this company. I had coverage with them for a few months and they denied every single claim, including just regular office visits to my PCP. During my call with their agent, I was very clear about exactly what coverage we needed, and he assured me he understood. He absolutely lied to my face and now won't return emails, calls, or texts. And trying to deal with the claims department directly is impossible. I don't understand how companies like this stay in business.
So, I mean, I think that there's a lot here, right? I believe that Wade Mosier probably was very forthcoming with exactly what he wanted. Here's the problem. U.S. health agents can only sell U.S. health products.
Yeah.
So they don't have an alternative. If what they have to offer does not meet exactly the need that you have, they're going to still try to fit that round peg into that square hole because they don't have any other choice. If they don't sell you that product, they have to send you off to another broker. And so I think that that's kind of probably what happened here, right? They just said, I hear ya. I don't have it. This is what I have. Take it anyway.
Take it anyway, right? And so let's kind of like dive into one of their plans that the first one that they probably most people end up on, right? So if like you're shopping for health insurance and you land this video, you're like, hey, is this company good or is it going to be bad, right? Let's dive into like one of their first plans that they show most people. So let's take it away.
So Premier Advantage is really kind of a revolutionary product. I don't necessarily know that it's the worst thing in the world if people understand what they're purchasing. It's just that I seldom run across clients who actually understood some of the really important components of this plan. So it starts out with 3 different levels, and essentially you have an indemnity plan. And an indemnity plan, in the simplest terms, is it has a flat dollar amount or fixed benefit that it's going to pay toward the service. If you see the service listed at that dollar amount, that's what the insurance company will pay on your behalf. If you don't see the service listed with a dollar amount, it means that it's not covered by the plan, right? So indemnity plans, you're not going to find a less expensive option than an indemnity option because there is not a max out of pocket on an indemnity plan on the side of the insurance company. So they're not really assuming a ton of risk here because they have a cap. Like they're only going to pay 6 visits at $75 on plan 1. If you get to 7, 8, 9, 10 visits, you're on the hook for the remaining.
Correct. Yeah. So indemnity plans are not bad by itself, but the level of dollar benefit in here for the price that it typically is typically pretty expensive.
For sure. But they do market it as being an alternative to the marketplace because it is so much more affordable. I mean, if you put a person or a family on this plan versus the marketplace, you're typically looking at a 30% reduction to what their marketplace plans would look like. But when you really dig in at some of these benefits and their potential inadequacy or where they can kind of leave you in a lurch, I mean, I think the first one is the surgical benefit, right? We don't have a surgical benefit on plan 1. We do on plan 2 and plan 3, but really those are not very high limits for surgery.
Yeah, like $4,000 or $8,000, like
a cap.
Is a cap, right? And so most people, I would say, end up on plan 1 and they don't realize they're potentially not covered for surgery until they go.
Correct. Yep. Exactly.
But the difference on Premier Advantage, I think it was smart from
Where's their hospitalization? Because I feel like that one is lacking as well. Whatever their hospital ICU room and board is $800 a day. You guys, they're not even going to hook you up to an IV for $800 a day in the ICU. Like that is going to be blown through
Yeah.
so
A
quickly.
room and board is $400.
Yeah, hospital room and board, $400. It is thousands of dollars just to set foot in a hospital. So again, and this is all the insurance company is going to pay. So when you exceed this amount, you will be left holding the bag with a pretty substantial bill that you owe to the hospital.
And most people don't realize this. They think they're getting something
Great
better, and they're like, and when you go to a hospital, it's too late. Like, it's whatever insurance you have in place, right? So the difference with Premier Advantage is they give essentially a upgrade feature, I believe a $5 million cap short-term plan. So it's like kind of being on car insurance, like you have liability, and you're able to upgrade to collision in the event of
after a claim.
After a claim.
Is very inventive. Sounds fantastic. Not a terrible thing if people understand it. It's just that 9 out of 10 people that purchase this plan or sold this plan don't understand that it's a one-time per client, per lifetime upgrade. This plan has gotten a little bit more stringent as time has gone on. You used to be able to move from this plan if you didn't have if it was, I don't know, an appendectomy or some reason that you upgraded here, you were able, that it wasn't like a terminal illness or something along those lines. You were able to move from this plan to their more traditional deductible plan. But now that's not the case. If you're on Premier Med or if you're on Premier Advantage and then you upgrade anytime in your lifetime, they are done with you for good.
But let's talk about that. There's an additional cost when you upgrade. What's the cost typically?
Well, and that's the part that they don't explain. The price when you add Premier on this expensive short-term option, it's going to be far more than what your premium would have been in the marketplace.
It's like a marketplace price,
but then some.
But then some.
Yeah.
Plus the whatever you're paying monthly. So it's like 2 monthly drafts.
Correct. So you have your original payment, plus it increases by 40, 50, 60% on top of what you were already paying. So now what seems super affordable, maybe not.
Plus a deductible. You still have to meet something before they start
plus
paying.
The $3,000 deductible. Correct. So again, there is definitely a place. I think the reason you purchase this plan is for that upgrade. The issue is that it's a complicated plan to explain. And so because of it, and because their agents only have this portfolio of products, they just they kind of gloss over these really important details because they want you to take the coverage and they don't want
how do you say, just from clients we talk to, how do clients feel like they were perceived in the plan? Like, what were they told without
just that they could upgrade, it would pay everything forever, it was this great value that they were getting, and it was all because they were healthy?
Well, the way that clients tell us that they were told is that they had a $0 deductible and their max out of pocket's $3,000 and then everything's covered.
Yeah.
But that's not factual. You actually have to it's like literally buying a new plan and on the top of your premium, and you can only keep it for a certain amount of time before it cuts off.
Correct.
And then you got to pay that premium plus $3,000.
And now because you've upgraded whatever's happened in your world that caused you to upgrade, you're probably not insurable most places. So they will let you ride this out until you can get onto a marketplace plan. But if at that point you have to go to a marketplace plan, depending on what's going on with you, there are some places that won't accept marketplace coverage depending on what your condition is. So you may have saved a couple bucks along the way, but now you've kind of pigeonholed yourself into only being accepted on the marketplace plans, which if you had made a different choice prior, you could have potentially had more of a long-term solution that was a better fit.
Yeah, so I have a really sad story. So when I was about 7-8 years ago, I was out in East Texas and I was dealing with a client, and they said they had one of these plans and that they had a $300,000 claim. I can't remember what happened. They were in and out of the hospital, and they had called Freedom Life, the carrier, the underwriter, and said, "Hey, I don't know what to do." And the customer service person did not let them know about the upgrade, because the important thing is the upgrade's not automatic. You actually have to call and initiate
an upgrade department.
Yeah, you actually have to call and initiate it. And so her indemnity base portion did not pay for anything. It was a $300,000 bill, and it had been a year, and the company was not willing to accept it because she no longer had the plan.
Wow.
Which is super sad. As agents, and this isn't just Freedom Life, this is a lot of other companies, but it's super important. These agents don't know that you have a major catastrophic event. So there's no like process for you to communicate it, and then you're just stuck. And it's not like these people at an insurance company, this is just isn't Freedom Life, but it's especially important with them. Like they need to be proactive. Like if you call, they need to let these people know about their upgrade, but they don't even know, and now they're stuck.
Well, and I think that the other part of it is that a lot of times if you attempted to get back in touch with your agent, I mean, we just saw it on one of those reviews, they don't answer the call. Like they're your best friend until you actually have to use your plan, and then you can't get anyone on the phone. Or like, how many times do you hear, like, I tried to call my agent and they're not with the company any longer? Because these guys turn and burn some agents.
Yeah.
So
yeah, it's like a kind of a Wolf of Wall Street. Like, just go Google some of these sales offices. It's like, man, do I really want to put my family's insurance in? Like, these are the people in charge of it, you know? And so, crazy stuff. So that's the first plan. I would say that's where most people end up. They only have really 3 plans, just from our experience. The second one is more a deductible plan, which honestly, it's not a terrible plan, but it does still have some limitations inside the plan. It's typically a little bit more pricey. It's kind of like more marketplace like pricing, I would say, on the plan. They just have look at all these exclusions here, guys. They have so much stuff going on here. So base is kind of like the other one. It's an indemnity plan. It's still indemnity for the base, which isn't bad, but from what we see, if someone's typically the people that end up on these plans are making, and there's nothing like, it's not, your income doesn't always determine what you pay for insurance, but just more income, you typically get better plans, right? The people that end up on these type of plans typically have, what would you say, like $100,000-$200,000 plus.
I think that they advertise you have to be like 400% above the poverty level.
So typically they want a better plan, right? They're usually self-employed, they've come from group insurance, or they're just starting their own business. And most people in that scenario typically want, or they're used to, all of their wellness being covered.
Right. And this plan could be fantastic if you're not 45 or above, because I think the age for a colonoscopy is 45 now. So a colonoscopy, where is it on here? A colonoscopy is, I think, like, roughly estimate, if you Google it, it's like a $6,000 surgery if you had no insurance. Your typical group plans, your marketplace coverage, those are going to cover it completely. You're going to want this thing covered completely, because this one pays what toward a colonoscopy?
$450, $550, or $650.
So let's say that I had a $6,000 colonoscopy and it got cut in half for having the UnitedHealthcare negotiated rate. So PPO discount, cut it down to $3,000. And my plan at the top tier paid $650. I am not going to be very happy when that is over and I owe still several $1,000s for this event that no one highlighted for me and told me that it wasn't going to be fully covered. I just assumed it would all be completely covered. And now the damage is done, right?
Yeah, and I'll say the other thing for families with like immunizations is let's read off that. So is that $50 across the board?
Yeah, 10 per child per year.
And how much are immunizations?
Well, I know when my youngest child had her 4-year immunizations, I think you get like 3 shots and they're kind of compound or whatever. 4 years is a big one. And if we had not had insurance at all, it would have been $900 worth of insurance or $900 worth of cost. And so take the 900 and again, you just a simple rudimentary math. The negotiated rate cuts it in half. You're down to $450, but for 3 shots, it would have paid $150. You still would have owed $300 in that example for those immunizations. Not very happy. And again, you're never going to talk a provider into, you go back after they've already billed insurance and you're like, oh, can I get the cash rate now? They're never going to do that. They've already billed insurance. They're just now waiting to get paid. So like once the damage is done, there's no going back on this stuff. You get the money and you take the L and you kind of move on.
Yeah. For sure. So I would say a lot of families end up on these plans. I would say a lot of people in their 50s and 60s who are just starting a colonoscopy end up on these plans. And they're shocked when they get these bills for hundreds or thousands of dollars.
Now, the perk is, depending on the agent and what they sell to you here, you do have different caps for the certificate. So you can do an unlimited certificate here, meaning if you get to your deductible and out-of-pocket max, the plan would pay unlimited bills for the remainder of the term. The deductible and max out-of-pocket would reset with the calendar year. So in a lot of ways, there are a lot of reasons that this plan has advantages, that it is, no pun intended, it's secure advantage, but has some advantages. You can kind of customize it. You can build build it based on what you and your agent discuss and come up with being the best. You get to pick your package, but
Yeah, but for the big stuff, the difference here is it's not like an upgrade, which is cool. Like it's in the plan, but the deal is they split the deductible. So they give you one deductible for accidents. They got in here, one deductible for sicknesses. Okay. So it can kind of add up, right? Because if you pick like a 75 or like a $10,000 deductible, remember deductibles, if you're watching, is not your first thing. It's not the only thing you pay. That's just the first step. After deductible, then you have your co-insurance where you cost share. It's either 60-40, 70-30, 80-20, and then it's to your max out of pocket, which could potentially be $10,000, $25,000, depending on if it's in or out of network. And that's per person. So we're talking like 20, 50, like 100 grand, but for sicknesses and for accidents. So they split it. And so it gets kind of wonky. What's your thoughts on that?
well, I think that majority of their agents were trained, and I think that it's the right thing to do to add an accident coverage on here. But in a lot of their states now, their accident coverage went away. So the thing that they were putting on to kind of absorb the shock of the accident deductible now is no more. And if the company doesn't offer it, then the agent isn't offering you something to like go out and find another carrier that will cover that. So you're just kind of in a lurch.
Because a lot of plans now, just with other companies where like the rest of the market is going, is they give you a flat deductible. Like your max is either usually 9K, like per person. Usually it's two people in the family and then everything's covered, which is like 18,000. What we typically do is we put ancillary in there to cover up that 9 to 18K. But on this one, it could be like 100,000 if it's out of network,
And they don't have any longer the options to plug up those holes.
To plug up the holes. And so
Yeah.
again, I don't think a lot of people end up on these plans from what we've seen is, oh, my deductible is $7,500, but that's only one half. That there's another $7,500 deductible if it's another condition.
Right.
Which is kind of crazy.
And this is the better of their plans. It is not that much more of a savings to what the marketplace would be. I think that the perk is you get the UnitedHealthcare network versus an HMO on the marketplace, but there just are now, this is not the only game in town. There are lots of other PPO options that are available that would put you in a much better place.
Yeah, 100%. Okay, so that is the second one. Third one is kind of rowdy for sure. It's definitely like less benefit plan. They call this a guarantee issue plan, meaning that anybody can get it. And so with these agents, because like getting people approved is so strict, they're like, hey, we had to come out with a plan just so people can honestly say.
Well, and what happens is they are so stringent that a lot of their clients, especially if they're truthful on their verification call, they get declined. And now that will forever be in your record with them. So it's not like you're going to come down the road and get approved later. So they had to come up with a solution where they could put those people so they didn't lose the client altogether. So they came up with this other, what's it called, health access option that is a fixed indemnity, limited benefit. So very similar to what the Premier Choice or Premier Advantage option is, but does not have the upgrade and is not the UnitedHealthcare network, right?
It's not. No, it's the multi-plan network, which is not a terrible network, but it's just honestly like a lot smaller than, if I can type, right? A lot smaller than actually United. And so it's really hard to sell these plans because it just uses a lot smaller network and it's
and they probably were sold this plan saying, come be a part of United. And then they got declined. And then they were like, oh, by the way, it's not United, it's multi-plan. And for any plan that you're buying out there, if you see multi-plan as the network, that's your first indication. It is probably limited benefit in some way. Like it's not a full-blown health plan.
Yeah, let's look at this. Like, what do they pay for ER? $100? I feel like that's a joke, right? Because it's not a joke. It's real.
That's the physician benefit, right? Is that all that they're?
Oh, emergency room physician benefit. Okay, yeah, still physician, but
the ER, because that feels light. There we go. Emergency room is still $250. It's not much better. So that's not a very big benefit for the ER. I mean, if you seriously set foot into the ER, you're spending several $1,000s every time.
Yeah, 5K. That's pretty crazy.
Yeah.
Surgical benefit. This is pretty crazy. Facilities $1,200. Outpatient surgery benefit up to $8K.
For one, yeah.
That doesn't feel like a lot, right?
It doesn't feel like a lot. Depending on the surgery, I mean, that's more of like probably an outpatient. I don't know.
What is, I haven't looked at this one in a minute. What is inpatient? 8,000. I feel like inpatient's more than outpatient, right?
Oh, yeah.
Yeah.
Hospital room and board, $750 a day. Not even a drop in the bucket for what you will spend if you are admitted to the hospital. Hospital
ICU.
ICU, $1,500. Oh my gosh.
Yeah.
Like just really inadequate benefits. So yes, it would pay something. And honestly, some coverage is better than no coverage. But again, they're not the only game in town anymore. There's so many other of these similar plans or guaranteed issue options that you can put a client into that would give them such better protection.
Yeah, such better for sure. So yeah, guys, if you're watching this and you're like, hey, I've got to find a better option.
Or I was duped.
I was duped.
They didn't tell me all of this.
Yeah. What should they do? What should they do?
Well, they should talk with a broker. Here's what I will say. The difference between a captive agent, which is what these agents are, versus an actual broker is that, we're a brokerage. We have access to all of the plans out there except this captive plan. And so, and by choice, right? But it means that every single person that we encounter, we have a solution for. But more importantly, we don't really have like a dog in the fight or like skin in the game of which plan you pick. We're just going to find you a solution and know that we're going to be compensated by the insurance company regardless of what you pick. These guys have to sell you this because it's their only option. We don't have that same pressure. We can show you everything, show you what actually works for you and put you in the right place instead of trying to make you fit into one of these boxes.
Yeah, 100%. So there's going to be a link down below if you guys need help. We have agents ready to help out. We shop all 50 states.
And DC.
And DC. And that's the thing with a lot of US health plans, they're only like in 30 states. And so a lot of people reach out and be like, can I get this? Can't get it because they thought it was something else. And so if you guys need help, like reach out. We're more than happy to help out. It's about a 20-30 minute call. We check all your doctors, all your meds, and make sure that the plan is actually going to work for you.
And it's no cost to you. So it's like anything else. Like if you can work with an expert who can help navigate this, like why would you not? Like it does not cost you anything for our service. We really are just here to get you into the right plan based on how you use the plan. So that guy that said he told him everything, like call us because we'll find you exactly what you were after. But you don't have to settle. And even though they act like this is the only game in town, it was probably one of the better options a decade ago. It's just not anymore. Like there just are a lot of other options out there that can meet the need and do it better.
100%. So guys, I hope this brought you value. Put down in the comments down below if you ended up on a US Health plan or what your thoughts are or another plan out there. Let us know if this brought you value. And we'll see you guys on the next one.
We look forward to chatting with you. Give us a call, thebenefitsboss.com. We're standing by to help.
All right, I've been Dakota.
I'm Lori.
We'll see you guys on the next one.